Excellent, team. Welcome back to NIL Office Hours Week 4. We took last week off for the holiday. I hope you all had a fantastic 4th of July weekend. Every Tuesday at noon, we're here for 30 minutes, one topic, real answers. Week 1, let's bring you up to speed. We had NIL 101. Week 2 was compliance. Week 3, contracts. Today, week 4, we're getting into financial planning essentials. Here's the bridge from last week. Week 3, you signed the contract. You negotiated the terms, you understood the obligations, and then the money hits your account. Now what? Because here was what nobody tells you, and Coach is going to get into it with us, because before the money hits your account, the IRS already knows about it. And in 30 minutes, you will too. Coach John Bronkhorst and Capital Wealth Strategists are here to make sure you're not the only athlete who has to find out the hard way. Coach, welcome back. So glad you could join us.
Great to be back. Missed you guys last week, but great to be back in the saddle and talking NIL and talking about financial planning.
Sure, but we don't want to talk about the IRS, but we have to, because they always have a hand in the pie one way or another.
Oh, absolutely.
Well, here's the truth that nobody has told you. NIL deals trigger federal, state, and self-employment taxes. Ignoring it leads to penalties, debt, and financial stress. Early awareness equals financial control. John, let's start here. Most athletes think NIL income is like a scholarship, tax exempt. What is that? Why is that completely wrong? And what does it actually mean that the NIL income is self-employment income?
Yeah, it's because that's basically what it is. I mean, it's not a scholarship. I mean, you are getting paid for services, and so, like you said, the IRS is going to be the first thing that's going to want a piece of that action.
Yep.
And so, NIL income generally is taxable. The exact tax treatment depends on the athlete's specific circumstances, which is why it's so important for these student athletes to work with a qualified tax professional when they're going through this process. And that's one of the things that I do with my team, is that as part of my what I call coaching staff in this process is helping direct student athletes to a CPA or a qualified tax professional to help them in that process.
Awesome. So let's kind of break it down, the scholarship comparison. Scholarships covering tuition and fees are generally tax exempt. NIL is not. NIL is self-employment income. The IRS treats every athlete with NIL deal as an independent contractor running a business. Federal income tax, state income tax, self-employment tax at approximately 15%, all of it on every dollar, whether you get a 1099 or not, whether it was cash or free product, whether it's $200,000 or $20,000. Coach, walk me through what exactly is taxable, because I think athletes assure that it's just cash. Not what surprises them most.
Yeah, I mean, I think one of the biggest misconceptions in college athletics is that if an athlete earns like $10,000, they feel like they think they have $10,000 to spend, and that's right. simply not true. And so, because the biggest goal, when it comes to NIL money, is it's about making smart financial decisions with their money. And so let's simplify this. Okay, federal income tax. Okay, if you earn NIL income, you may own federal income tax. The amount depends on your overall tax situation. State income tax. Some states have income taxes, some states don't. And so where you live and where you earn your income may matter. And then self-employment tax. And then many athletes are paid as independent contractors. So that means self-employment taxes may apply. And so that really surprises a lot of first-time earners because of the estimate. They have to figure out estimated quarterly tax payments, and so they have to fill out a 1099.
Are you ready?
And that sort of thing. So and that's one of the things that in talking with with agents and in this process is that the universities they hand them they hand them the paperwork, they send them off to a CPA, and that's about all the extent of their financial literacy. And so, it's really, really important for our athletes before they get that first check that they understand the process that comes with earning that first check.
No question. Aaron, I'm going to wrangle you in because as a team mother for your daughter's softball team, some of these athletes are going on to play at the next level, at the college level. Accountability over excuses is one of the frameworks of the Caddy framework. I didn't know in the context of taxes. What does that cost an athlete beyond just dollars?
Well, it's also costing you your integrity. I mean, it's your job to make sure you have all the information. Saying that you don't know is absolutely unexcusable. I mean, I'd like to use it. We all would like to, hey, I didn't know, but that doesn't say a lot about you and your character. So my advice would be, this is why we're doing this. You have to seek out the information. You have to be curious. You have to be inquisitive, and you have to get all the information to understand. And if you think you understand, my advice would be, dig 5 layers deeper, contact us, contact John, keep digging so that you can say, you know what, I have all the information in order to make an informed decision.
Awesome.
Yeah, and to build off your point, Aaron, the one of the things I tell athletes all the time is, and it's really important. I think taxes aren't a punishment; they're a responsibility.
Right.
Yep.
And so you have to change that mindset of, oh man, I made $150,000 this year, and I got to pay taxes on them. Blah blah blah. That's a responsibility.
Yep.
That's not a punishment for earning the income.
True.
The other thing I'd throw out there real quick, and maybe we'll get to this a little bit later, is parents, you need to be aware too, because there's probably implications for you as well, based on how much your athlete would earn.
Absolutely, Aaron, that's a great point. And Coach, I'm gonna throw this back at you. This seems a little sticky. So if an athlete is making is there a certain amount where an athlete can make where the parents can't claim them, or because they're still a student athlete that the parents can claim them? Where is that gray area?
Basically, if they still qualify in any specific way that parents claim them as a dependent, that income is on their tax return.
Okay.
And so unless that student athlete has filed, is old enough now to where they're filing their own taxes, they're no longer being claimed as a dependent, is the only way that the parents are off the hook for that tax responsibility. And so it's extremely important that, the tax implication information is not just for the student athlete, it's for the parents as well.
For sure. With that, what you owe and when. There's tax types and there's key deadlines. Coach, 2 questions on the slide here. Break down the 3 layers of tax NIL athletes, what they're going to owe. I mean, in plain language.
Yeah, well, I mean, it really is. There's not a such thing as one size fits all percentage.
Sure.
Okay. The amount depends on factors such as total income, state taxes, and other circumstances. Okay. So athletes, and that's why it's extremely important, again, that athletes should work with qualified tax professional to determine an appropriate amount. And because one of the biggest surprises is that many of these student athletes don't realize that they're independent contractors, and independent contractors don't simply pay taxes once a year.
Yep.
They need to make estimated tax payments throughout the year. Yep. And so if they wait until April, it's going to create a very unpleasant surprise for them. And so again, it's a responsibility. And so claiming ignorance is something you can't do when it comes to taxes. It doesn't fly.
100%. Coach, you are absolutely right. There's a big difference between a 1099 and a W-2 athletes and families. You need to know this. And I'm going to tell you a little story from experience. For the longest time, I was an employee at a gym. This was early on in my career. And then I set up an LLC, started my own company, and I still had the mindset of a W-2. And guess what? I did not anticipate quarterly estimated taxes, and I got hit with a penalty. There was no mulligan for me. That was a rude awakening. And let me tell you something, I never missed it again. So on that one, Coach, quarterly estimated taxes, most athletes have never heard of these. What are they? When are they due? And what happens if you miss them? I'll tell you what happens when you miss them, but go ahead, Coach.
And basically, in every quarter, it is your responsibility to file your income taxes.
Right.
And just because you are an independent contractor, I'm an independent contractor, and what I do. And so I mean, my cell bills, because I work out of my house, there's so many things that I can write off in regards to that. So, basically, a 1099 is the tax form commonly used to report payments made to independent contractors rather than employees. And so, they're technically, they own their own business. They file taxes as self-earned income, tracking business expenses, creating budgets. All of that plays into this whole entire picture of being a 1099 employee, and paying those taxes quarterly. If you don't, like I said, it's going to be a big surprise and a big penalty when you're not doing it appropriately and you're not doing it on time. And that's, again, it's going to sound like a broken record throughout this entire podcast today. Get in front of a tax professional before you get that first paycheck. Don't wait until afterwards. Do your due diligence. Get in front of that CPA, that tax professional, that tax attorney, somebody who knows the system inside and out, because they're going to be able to walk you through all of the steps, all of the timelines, everything before you get that first paycheck. If you wait until after you get that first paycheck, you're already behind the 8 ball.
Yep.
Don't wait.
Yep. No question. So, team, I'm going to throw out a little reminder of dates. Make sure you log into this, and that's April 15th for the W-2, but you have June 15th, September 15th, and January 15th for our quarterly 1099. Aaron, I'm going to turn over to you. Discipline over motivation, part of the caddy framework. Moving 25 to 30% to separate accounts every single time, even when you don't feel like it, even when you want to spend it. How does that discipline principle apply here?
Well, I'll tell you, it keeps you out of trouble, and it's going to keep you focused on your responsibilities, as John said. So you want to make sure you have a plan in place and you're not just willy-nilly winging it, and you're having these dates come up and you don't know what's going on. So having the discipline to go, okay, you know what? I don't need to go out. We had a great story yesterday. I don't need to go out and buy a Bentley. I can go in, and that's a really high-end earner. But guess what? Ride your $50 scooter to practice. Put the money in the bank. Put 25 to 30% in another account and live off that. You're a college student. Enjoy being a college student. You learn what it's like to, not have a lot, have a small paycheck and go through it that way. So the less you think you have access to, and you can even, yes, you're manually going to have to do it because you're not have an automatic deposit going on, but the better you can manage your money by having separate accounts, the more happy you'll be in the end, because you're not going to be getting caught off guard later. So just do it. You don't need to buy new things all the time. Just sock the money away. That way you can take care of your responsibilities and you have money saved for yourself for something long-term down the road.
Yep, exactly. And that's one of the things when I do free educational workshops for student athletes and families. I do it at the high school level as they're getting ready, and then also at the college level. And that's one of the things that I discuss with them is all these avenues that they need to be thinking about. Because obviously, when you get that first $15,000 check, you think you're rich.
Right.
You're ready to go. I just got this big check that's going to be coming in every month now, blah, blah, blah. And one of the things I reiterate to them is, here are the things that they need to think about. Number one, protect it. Protect the income. You got to protect the income stream, which is you as the athlete. So making sure that last paycheck isn't your last paycheck. And making sure that we're going through all the avenues of things that can take that money away from you. It can be crazy Uncle Joe with his investment opportunity. It's taxes. It's putting money, like Aaron's, like you said, putting money away and storing it and investing it and letting it grow. And so it's doing those little things, and it's also creating a separate account for their taxes, which is incredibly important. And I try to emphasize to them as well, set up a separate bank account specifically for your taxes.
Sure.
So that you can put money away into that, you don't touch it, and that account is solely to pay your taxes every quarter.
Yep. No, exactly. Team, now the good news. I know it seems like an oxymoron when we're talking about taxes that there is any good news, but there is, and they are in the form of deductions, agent fees, training costs, equipment, travel expenses. Coach, what can NIL athletes legitimately deduct? Give us a particular list and the ones that might surprise people.
Yeah, I mean, there are several things that you can deduct. I mean, anytime. You can deduct your gas expense if you're having to drive to an event, because that's what you're doing. Anything that has to do with your business expense in regards to cell phone, internet. I mean, you can write off a lot of things that you are using every day that's involved in your NIL agreement. With the companies that you are partnering with. There are so many things. But saving receipts is incredibly important. Making sure that you document everything. Document. Mm-hmm. That's incredibly important. Records should be kept. Contracts, receipts, invoices, payment confirmations, bank statements, any documents related to business income or expenses. You want to make sure that all of that is saved. So when it is time to start filing those quarterly taxes, you know what you can deduct, what's deductible, what's not deductible according to IRS rules.
Exactly. Well, let's go a little bit deeper on that. What can athletes not deduct? Because I think some athletes are going to hear deductions and start getting creative with their finances.
Yeah, I mean, you can't just simply, it's funny because there's a fine line of what you can't deduct. You can't just simply go out to eat and say, because I talked to somebody about my NIL deal, that I get to deduct that meal. I can't. Your everyday life expenses are not tax deductible in regards to what you do. The only thing that is tax deductible is anything that is designed specifically to what you're doing for that NIL agreement. If it's business travel, professional services, graphic design, anything, those things are those are the things that you can deduct. The things you can't deduct, you can't just deduct anything willy-nilly that you feel on everyday living expenses, groceries or whatever. And as an expense, and think that I can get away with that. It's just going to be a matter of the specific things that you're doing for your NIL agreement at that point in time. Your travel to get there, your travel to get back, the services you provide, those things that are intricate to that agreement, to that NIL deal, is what you can write off. If it doesn't apply to it, you can't write it off.
Got it. Aaron, how about for you? Integrity and financial decisions. Some athletes might be tempted to, quote, get creative with deductions. How does integrity over image apply here?
Well, let's just say do the right thing. I know we all want to get creative. We all might want to say it's more than it is, but ultimately you want to be truthful. You want to be in your integrity, being, not lying. Let's just say that. So I would just advise it's not worth lying. It'll come out in some way, shape, or form. If it's not with the IRS per se, it always catches up with you. So you're better off being in your integrity, doing the right thing, making sure you're listing things accurately. Again, seek out professionals so you know what you can and cannot do. I know that there's also ways if you set up LLCs versus just 1090, there's a bunch of different things for you to unpack with this, but I would just always seek advice and do the right thing once that advice has been given.
Yeah, 100%. Because if you can't document it, you're not going to be able to deduct it.
Yep. And I would also say find people that are high integrity that are going to be your tax professional so that you're not getting caught doing something you shouldn't be doing.
Exactly.
100%.
Yep. So let's get into the recap. There are 4 things right now. Track all NIL income and docs as 1. 2, meet estimated tax deadlines. 3, organize deductible expenses. 4, consult a tax professional coach. For the athlete listening right now who has been earning NIL income and hasn't done any of this, what's the single most important thing they do today besides reaching out and contacting you?
Start getting everything documented. Pull all your records, pull everything that you have, that you've done up to that point, and get it all organized and ready to go. Because again, as soon as you get that done, contact that CPA so you can, because you want to limit that penalty of that you haven't been paying on those taxes, you haven't been reporting anything. Lessen that burden of punishment by getting it taken care of ASAP. But it starts with documentation. It makes sure you have everything properly documented. You just can't fill out the form and say, I'm deducting X, Y, and Z and have no documentation for it. So make sure you have all of your ducks in a row, all your I's dotted and T's crossed. Contact that tax professional and get it reported now.
Awesome. Great advice. Before we wrap up and get into some questions, Aaron, final thought. The CADI framework. Tell us a little bit about what CADI is for those who are just joining us. CADI framework and financial health. Why is this about more than just taxes?
Well, because it's a reflection of who you are. How you do one thing is how you do everything. So our CADI framework is character over clout. So that's knowing who you are and not doing it for image. Accountability over motivation.
Excuses.
Accountability over excuses. Discipline, which means you got to be accountable to what you're supposed to be doing. Discipline over motivation is you have to structure, you got to show up just like you would to practice, just like you would to anything else. You have to take that same principle into managing now your NIL deals and your money. And lastly, integrity over image. And so that means just doing the right thing all the time. You don't want to end up in the clink over some amount of money. It's not worth it. So that's how our CADI framework, we help you with your decision making. Everything comes back to those 4 pillars. And I will tell you, if you follow those, you're going to be really successful in life, period.
100%. 100%.
Yep. Well, awesome. We're going to get into some questions that have come across the queue here. Coach, this is a question from an athlete. My brand sent me free gear worth about $1,000. How do I even pay taxes on that? I didn't get any cash.
Okay, repeat that question again.
An athlete said, my brand sent me free gear for about close to $1,000. How do I even pay taxes on that? I didn't get any cash.
Yeah, I think the biggest thing is that you need to get what the value of that, because it's a gift. Basically, it is still gear. You were gifted that gear. You were sent it. They need to get the value of what that apparel costs, what they got, and make sure that they report that.
Got it. Now here's another one. This is a great question that I don't even know that. Not to say that I should know everything, but John, should I set up an LLC or an S corp for my NIL business? I'm hearing conflicting reports from academic advisors.
That's a great question, because I've talked to several people. A lot of them are saying yes. A lot of people that I've spoken with say yes. Set up an LLC, set yourself up as your business, as a business, because you are a business. It'll help with the expenses. It'll help with the tax burden, and that's where you can start separating some of that tax liability off of your family, and make it into your company. I've had some who say no. only if they make above a certain threshold of income do they need to be filing. They need to be filing for an LLC. If you're making under a certain amount, you don't need to be worrying about it. Just file your taxes as you would, et cetera. So I think it all depends on the amount, and I'm not sure that honestly there is a clear-cut threshold on what that amount should be. To me, I think if you're making anything in the six figures, I think it would be wise to set up that LLC to help separate that tax burden off of the individual and more into the business. But again, the biggest key for that's going to be documentation and making sure that everything is in alignment every day that they do business.
Awesome. This falls right in line with what we're talking about. John, I had a breakout year last year, and I've been earning NIL income since January and haven't set aside anything for taxes. It's June now. Actually, it's July. How bad is it? And what do I have to do right now?
Well, I can't tell you how bad it is, but it's not great. I don't know how much money you've been making, but the biggest thing right now is, again, as I said, we've said over and over again, it's important that you get in front of a tax professional right now. Pull all of your documentation, how much you've made, and you're going to probably incur something. And so the further you push it out, the harder that penalty is going to get on you. So get all your information together, get in front of a tax attorney, a CPA. Your school should help you, direct you to a CPA that they're working with. If not, I would just pull one out of I'd say the phone book, but no one does a phone book anymore. Pull one up in your local area and get the reviews on it and find a reliable CPA that's going to help you and understand the NIL territory when it comes to taxation. Awesome.
Team, track everything. Set aside 25 to 30% every single time. Meet your quarterly dates and get a tax professional who understands NIL. Do these things starting today. Protect everything you've earned. Before we close out here, Coach, where can people get a hold of you? Because it sounds like some of our viewers definitely need to reach out to you, whether that's a website, a social media, or an email.
Yeah, I'm on LinkedIn, John Bronkhorst. You can find me there. On X at Coach Bronk. You can also email me. It's john.bronkhorst at cwsplanning.com. Our company website is www.cwsplanning.com. Again, I'm always available. Reach out to me via social media. Send me a DM. Shoot me an email. I will get back to you ASAP and with any questions that you may have or issues that I can help you solve.
Awesome. Team, there's a QR code. Check out that QR code, download the checklist. And next Tuesday, July 14th, we're going to go into week 5, social media and NIL. This is going to be interesting because social media is where most athletes think NIL starts, and it's where most NIL mistakes begin. Let's register in the chat. We'll see you next Tuesday. Coach, thank you so much for your time. Aaron, thank you for your insight regarding the caddy framework. Coach, Aaron, we'll see you guys next week. Thank you very much.
Take care.